courageous that they've taken the step when a lot of other central banks, larger central banks, have dismissed Bitcoin out of hand. We're not at the aircraft carrier stage yet because the adoption for institutions is still incredibly low. And so as that comes in, there will still be an element of FOMO about that. I think the career risk will flip so that the question will be, have you thought about Bitcoin? And if not, why not? And if you have, what is your view of it? If you're dealing with your own money and you say, oh, I've got this Bitcoin thing sounds interesting, I want to buy some, you just do it, right? It's very quick. If you're part of an institution, you can't just do that. But that's quite amusing. But yeah, it's absolutely full. I mean, to the extent I'm thinking I'm going to have to unfollow it because I spend ages scrolling just through all the Retbots posts. But it shows that there's a lot of leverage being knocked out of the system. And that is that's a positive.
Then, hi, Sam. Thank you so much for coming on again. How are you doing?
Good afternoon. Very well. Thanks, Robin.
And it's really interesting because there's so many different topics now, and it really is focused a lot on institutional adoption, I think, 2025. And so I just thought I'd start with the question of like, what is from your perspective happening in 2025 with TradFi, or how I like to say the Bitcoinization of TradFi? What is kind of happening from your perspective?
So it's happening, but it's slow. And I think the reason for that is because if you're dealing with your own money and you say, oh, I've got this Bitcoin thing sounds interesting, I want to buy some, you just do it, right? It's very quick. If you're part of an institution, you can't just do that. There's governance committees and other committees and key decision makers and influencers and everything else. And so you need to put the case to a certain committee and get it agreed. And so it takes time. And of course, the more people are involved, the more people that need to realize what Bitcoin is and how it can benefit their particular institution or organization. And that takes time. And so, in a way, it's not really a surprise to me that, we can talk about the price, but I guess the price is an indication of how quickly the adoption is happening. So it's not a surprise to me that the price has been as flattish over the year because I think retailers bought what retail is able to buy, and the institutions are slow in terms of making those decisions.
It's also interesting because you talked about the price. It's like, I very much think because we now have a different investment crowd. So like there's more institutions, there's more mature money in the space now, or like slowly the mature money is coming into the space. I think that's why also price action is different. I think there's like a reason why it is different because now the majority of the money is not retail crowds like 2013 that are FOMOing in on panic selling all the time, but moreover, more people that are slowly getting in. But if they're getting in, they're actually going in strategically and with a plan, and they're not going out quickly or not going out quickly, not going in quickly. And so I don't know if this is a fair assumption, but I think Bitcoin it's George Boudin said it in such a nice way. He said Bitcoin is getting to be more and more of an aircraft carrier instead of like a speedboat, and it's harder to steer it in another direction. But once it's set in a direction, it goes longer and more stable in that direction. Is that kind of like the thing that you also see?
Yeah, that's a good way of putting it. I think because when you've got institutions involved, they are largely still thinking about it from a fiat point of view, and that might be for very good reason because they have liabilities which are denominated in fiat, whatever their local fiat currency is. They're denominated in fiat, and therefore that is the currency in which they are measuring performance of whatever assets they're holding, including, hopefully, some Bitcoin. And so as Bitcoin does well or doesn't go well, they're then rebalancing is one of the things that institutions tend to do within a portfolio, and therefore that helps to dampen. So you're selling when it's gone a bit higher, you're maybe buying a bit when it's gone a bit low, and that helps to dampen the volatility of the price. So there's things that are a natural part of how institutions operate that will help to dampen the price. But I don't think, we're not at the aircraft carrier stage yet, because the adoption for institutions is still incredibly low. And so as that comes in, there will still be an element of FOMO about that adoption. So I still expect plenty of volatility, but I agree that over time that volatility should come down.
It's interesting with institutions. Is this with all the institutions and like bigger players in the market that you see that they are just rebalancing? So they're saying like, we want to invest a 1% or 2% or 3% in Bitcoin, and they keep with those percentages. So like if it goes lower, they buy more. If it goes higher, they sell some.
Yeah, it could be. I mean, it's different for everyone, right? For every institution. So you're right. They might say, right, we're going to put in a 2% allocation, and then they'll rebalance. They'll buy a bit more if it goes to 1%, or they'll sell a bit more sell some of it if it goes to 3%, for example. Or they might set, an asymmetric, it's an asymmetric risk profile. So, they might allow more of the upside to happen before they start rebalancing. And it's very flexible in terms of how it could be done. And we're still very early. So we're still talking about not many institutions are seriously invested in this. But also you've got different types of institutions. So let's just try and think of some. So you've got pension schemes, of course, and you've got different types of pension scheme, which we can get into if it helps. We've got companies. What do they put on their own balance sheet? You've got charities. Those are the three main areas in which we operate as a firm. And so we're advising and helping to implement these types of client. You've also got asset managers are probably worth. Now, some of these pension scheme will use an asset manager. But the asset manager will have a mandate on how to invest the money that it receives. So, for example, it might only be able to buy global equities. So it can't buy Bitcoin directly, but it could buy a Bitcoin Treasury company, and that's where you get into that sort of conversation. You've got governments, which would include central government, local government, sovereign wealth funds, and each of them would operate differently. So central government doesn't have much in terms of assets on the balance sheet. It's not like it's got money just sitting there. It's normally spent it already. Although if it does have assets, they're highly illiquid. Maybe they're land or so on. And indeed, the larger central governments, the G7 governments, are going to be very hard to, that is going to be turning a tanker or an aircraft carrier. That is going to be tough because they're used to doing things in a certain way. But the local government is a potential area which we're looking at trying to help.
How do you actually look at the recent event of Czech Republic or like the Czech National Bank having like an experiment with Bitcoin and crypto?
I mean, it's good, right? It's absolutely right. So I think they're in a slightly good position in terms of, I think they sit slightly outside the European Central Bank in some way. I don't quite understand how they do that, but it's the $1 million or euros that they are using to essentially test primarily Bitcoin, but also stablecoins. I think was the press release. I mean, it's good, right? It's absolutely right that they should be thinking ahead, and it's courageous that they've taken the step when a lot of other larger central banks, have dismissed Bitcoin out of hand.
Yeah, it's interesting because they have the Czech krona, so they still have their own currency. So, for example, in Austria, we completely got rid of our previous currency and we only have the euro. But in Czech, even though they are in the European Union, they still have the Czech, I think krona it's called, and so probably this is the small difference where they can have a little bit more freedom in terms of like not doing everything that Christine Lagarde likes them to do.
Yeah, that's right. I had the pleasure actually of being in Prague twice in the last month. And you're right. So you can spend the koruna and the euro basically anywhere. I mean,
yeah, the euro is also like quite like you can spend the euro everywhere you go. I think it's in the whole of Europe where it's kind of accepted, but it's interesting to see those countries that not fully adopted the euro now have maybe more freedom. So like, I have no clue from a legal perspective if they actually have more freedom or if they just do it. So like I have no clue from that perspective, but it's just fun and interesting that those countries tend to experiment more. And like $1 million is not a lot as for them it's like almost nothing. But they already they wrote the paper, now they made the investment, and they call it an experiment. And so I'm really curious what's kind of the criteria for those experiments, like how did it test if the price rips up? like what are they testing? So like it's interesting for me to see institutions slowly getting in. But as you said, I think all those things that we are now seeing, it's just like the very first step. It's like super early in that transition.
Yeah. But it's good to see at least one central bank there take a first step.
What do you actually see as the main hurdles for those bigger money funds, the pension funds, the central banks, even like or huge institutions, also like companies like Tesla, Apple, the Facebook. I mean, Tesla has a small position, but like for all those like bigger institutions and bigger companies, what do you kind of see as the big hurdle for them to overcome to actually finally get into Bitcoin in a bigger way?
Yeah, so it's probably maybe a couple of things that are linked. So one is they've got more committees, more people need to be persuaded that it's worth doing. And then sort of alongside that, you've got that they're a big company, they're a big organization because by definition, they've been relatively successful in the past. Therefore, you could surmise that fiat currency has been a success, or they see things as having worked for them. So why would they need to change? I suppose you could have some sympathy with, if something's worked, why fix something that's not broken? But at the same time, these are institutions which are, if they've been around for 100 years, they're looking to be around normally for another 100 years, in which case they need to be more forward looking in terms of what could happen over the next 100 years. And so one of the messages that I'm trying to get out there is the importance of having a plan B from an institutional point of view. I mean, plan B has been talked about in the Bitcoin world for many years, but from an institutional point of view, thinking about where does money touch your business, your organization, and therefore, have you fully recognized the fragility of the fiat money system that you're using as your plan A? And therefore, does it make sense to then bring in a plan B, which is based on Bitcoin, which, so it could be, that could be a treasury asset, within your reserves. It could be as payment rails. Maybe a bit further out, it could be using Bitcoin as a form of collateral or things like that, which obviously brings its own risks and need to be carefully managed, if done at all. And payments includes lots of things. It's all payments into the company and out of the company. So there's a whole range of different things there that should be thought about. And one of the issues, I think, is that the quality of the money hasn't been on these organizations' risk registers, but it absolutely should be. And particularly now that we have a choice about whether to carry on using fiat or move over to Bitcoin or some kind of hybrid, as an interim solution. So that's one thing that I'm encouraging organizations to do, is just think about the pros and cons of your current use of fiat money and the pros and cons of Bitcoin. And that conversation, maybe think of it like a test, like the Czech central bank. That conversation, that discussion should then highlight, well, actually, there's certain areas where we're fine. And there's certain areas where actually we've got a bit of a problem here, in which case, can Bitcoin help us to fix it?
It's super interesting. I've never thought about that before because they have grown up in the fiat economy. Like most companies, I mean, of course, there are companies that are older than the 50 years, but even beforehand, there was some kind of fiat currencies already around. It didn't start at 1971. But then it's the same thing as all companies are facing. The more successful you get, the more risk adverse you get. Like you kind of trying to preserve what you have. If you don't have anything, you're risk on. You're like, what is the best thing I can do right now? Especially, it's the same with young people that are more like risk. They're more risk friendly and saying like, hey, like let's take that risk. Even though I don't agree with seeing Bitcoin as something risky, but that's the kind of the mainstream narrative of like that's how people view it. And so I get that there's a big company and saying like, why should we do it? I also heard from exchanges that deal with like small and medium sized businesses that are quite like rooted in the economy, that are quite big sometimes, even in the local economies, that they buy Bitcoin, but they don't want to say it. So they say like, hey, we have Bitcoin. It's a financial thing. Because we're not a publicly traded company, we have no upside of saying, as like the treasury companies have an upside of like saying, hey, we are Bitcoin treasury companies. But if you're a private company, how much upside do you have just by putting Bitcoin on the balance sheet when you say it publicly? But there might be some downside risk for the company, saying like getting weird messages, getting bad publicity if Bitcoin goes down. So I don't know. I feel like there's a lot of hiding still, a lot of like people that want to get in a big way into Bitcoin, but they're kind of risking for their careers, if that makes sense.
Yeah, I think you're right. Career risk has not yet flipped. I expect it will do. I don't know when, but I think it will do. You've got, and over the past few years, if you brought Bitcoin up at work, then maybe, that actually you'd be putting your job at risk, which is a crazy situation. But as adoption increases and the risks of the fiat money system are uncovered more and more, then I think I think the career risk will flip, so that the question will be, have you thought about Bitcoin? And if not, why not? And if you have, what is your view of it? And at that point, it might be, it's perfectly justified to say, well, I've given it a lot of thought. For someone in that position, I've given it a lot of thought. And actually, for these reasons, I don't think it's right for us, or I don't think it's right for us at this point in time, or I think this is right and that isn't. That's fine, right? The problem we've had historically is it being dismissed out of hand. But thankfully, I think that is changing.
Yeah, it's kind of hard to ignore now. Like it came to all the right people. Even if you think about it institutional wise, you're like, okay, there are small central banks in Europe talking about it. There is the president of the United States talking about it. BlackRock is talking about it. Tesla has some Bitcoin. So like you can take all those like kind of snippets of saying, it's not nothing. It's like, it's something. Even if you don't look at the fundamentals, just of like who's in it and who's talking about it, you kind of have to say like, maybe it's risky to not study it. Maybe it's risky to not look at it. Maybe that's the biggest risk a company can actually do right now.
Yeah, I entirely agree. I think that conversation should be happening. There is still a lot of industries. I mean, the pensions industry in the UK would be an example where it was just over a year ago that we announced that we advised the first pension scheme to introduce an allocation to Bitcoin, a small allocation that was at 3%. And the last year has therefore been saying, okay, I saw no point in sort of mentioning it and then never mentioning it again. Once I stuck my head above the parapet, I had to go full full throttle, whether it's through LinkedIn, being at conferences, speaking at conferences, podcasts. I appreciate the invites. Things like that. It's important to get the message out there. So that's been a year of that. And it's been very interesting over that year. Probably didn't talk about this on the previous time I was on your podcast, but we had, I remember early last year, say Q1, maybe February sort of time, I'd present on, it was a professional presentation, proper slides and calm discussion. I wasn't standing at the front waving my arms around saying buy Bitcoin now. It was a proper discussion about what is money and the monetary premium and things like that. So important concepts for a professional audience. I was getting heckled from the front row, which I found very unprofessional. But, I guess, some people feel strongly about this. One of the quite interesting things is that depending on who you speak to, so these would be examples of people who basically they'd done very well out of the fiat money system and therefore they didn't see any problem with it. Whereas you speak to younger people and they're incredibly frustrated that they may not know exactly how it works and why it's screwed them over, but they're aware that something's wrong and therefore they're much more receptive to, well, yes, maybe there is something in what you're saying. So that was sort of February time. And then as the year rolled on, partly we were invited to talk more about it I'm talking in the pensions industry in particular, to talk more about it, and training sessions and, online seminars, things like that, which were much more engaged and a serious conversation. So I found that very encouraging. I think we're still at the stage where, and we've been doing these presentations for the last 2 or 3 years, actually, in sort of fairly small groups. The general reaction is still normally, it sounds good, where can I buy some for myself? But they're still nervous about basically it's the career risk. Because that's the thing about institutions. The key difference is you are looking after someone else's money, whether it's shareholders or pension scheme members or, the charity beneficiaries. And it's therefore quite rightly a big step to go from I'll do something with my own money to I'll do something with someone else's money. So it's absolutely right that people who are looking after other people's money are cautious in doing that. I think, so it's a little bit frustrating that things are move as slowly as they do, but it's also understandable and it's right that the proper diligence is carried out. But at some point, I think it's similar to the career risk flipping. I think we'll get to a point where people realize actually they're effectively using the wrong unit of account, you could say. So they're thinking of their low risk position is cash or government bonds. And of course, once you've been in this world for a while, you realize that those are two of the most risky assets that you can hold, with the proviso that if you've got liabilities denominated in let's say pounds, sterling or dollars, then obviously that is your low risk. But if you're talking in absolute terms, in real terms, so adjusted for inflation, actually both of those are incredibly risky. And therefore, looking around for what else is more appropriate is actually less risky, leads you to Bitcoin and other things. And when I say other things, I mean, I think you can justify. I mean, obviously they're pretty highly priced at the moment, generally speaking. But equities, for example, I think some would be able to justify that. I think a lot of institutions will struggle with putting 100% in Bitcoin. So I think we should be gentle to them there, because they've grown up with a diversification is a good thing. And therefore, maybe they could justify 5-10% in Bitcoin, get comfortable with that over time, but they're going to want something else for the other 90%. And so that's probably going to be a mixture of real estate, equities, gold, maybe. So things like that. One of the presentations I gave at the end of September was, again, for a pensions crowd that we'd been really invited along to talk about Bitcoin. I went into the principle of you've got 3 things you can do with money that you earn or money you have. So you can spend it. So that's all around your lifestyle choices. You can save it and you can invest it. And this is quite a basic concept. But I don't think it's one that's really talked about in my industry. And I think that's because we just focus on the investing. When we're talking to clients, we talk about investing money. And that's, I guess, because you've got used to the fact that what's in the savings category. So I'd include in there government currency, gold, and Bitcoin. Now, of course, we're talking to people who have not really considered Bitcoin. And they probably dismiss gold as an old relic. So really, we're talking about government currency in that savings category. And obviously, it's a very poor savings vehicle. If you have something that loses value every year, it's pretty poor at saving your wealth into the future. So therefore, we get what would be in the savings category pushed into either the spending lifestyle category. So you buy stuff you don't need, or the investing category. So you invest in stuff you don't really understand. And what we need to be really careful with in the UK pensions industry is the vested interest in people investing in things that they don't understand, but maybe we do. That is a very dangerous combination. And which is why when I sort of think about, okay, we've got this spending, saving, investing structure with a better savings vehicle, i.e. Bitcoin, in that savings category, that pulls money in from both directions. And we see this, don't we? There's a lot of talk around how, if you've got money you can save in, you're thinking more to the future. Actually, you don't need that plastic tat or the extra beer or the whatever it is. Actually, you prefer to save it. You're sort of comparing it in what would those sats that I'm spending, how much would they be worth in 10 years' time? Well, do I really want to spend it something now which is frivolous? Probably not. And then the same thing on the investing side, where it's pulling wealth out of the investing category and into the savings category. And there's various ways that can happen. So anyway, so that's that concept seemed to go down pretty well at the end of September.
It is interesting because I had already some people reaching out to me that come from non-Bitcoin at all, but from my previous life in IT security, and even kind of wealthy individuals, and they were asking me like, "Oh, like you talk so much about Bitcoin, like why should I even bother?" And the most success I had with telling them about Bitcoin is 2 things. The first thing, I wanted them to understand how huge Bitcoin could be. Not saying that Bitcoin will be huge, but just saying if Bitcoin is successful, what it actually will be and how tremendously successful this is. And then saying, okay, if you have even like a slight % of chance that this might happen, now coming to the second argument, it is a unique diversifier. So if you have now, I don't know, a $10 million family portfolio, putting $100,000, like buying 1 Bitcoin, is a no-brainer for them for diversifying and putting something unique in their portfolio that acts very different to anything else and is potentially a huge win for the future. This can eat your entire portfolio, depending on how it goes. And so those are kind of two things, like making them understand why I'm so passionate about Bitcoin and why I'm talking literally every single day, all day long on it. And just saying, like, even if you think I might be right with 5%, even that low chance is already a good enough reason to not risk completely losing out on it. And for someone that has like a $10 million portfolio, putting 100,000 into something new that is unique and is the best performing asset over the last like 12, 10, 8 years, I guess it's like, that's a quite simple pitch, at least for one person. Like, I've never done it with institutions where you have to like talk with many different people, but that actually, people are like, oh yeah, that's quite rational. I guess actually, oh, I probably should do that. And it's also quite easy. Like, you don't have, like, it's not a real estate thing that you sell or like, you don't have to have any management. Like, it's super easy. There are exchanges that onboard like, individuals, especially if you buy like over 100K. Sometimes it starts a little bit above that. And so, I don't know. I found it really interesting. I think the BlackRock presentation that came out with unique diversifier. Actually, those talking lines work the best with people that are twice my age and have like 10 times my net worth, or 100 times my net worth. And yeah, I don't know if you also have like those kind of stories that tend to work with completely outside Bitcoiners. And I do agree with you, and I love that. We shouldn't scare people off. Like, if someone comes to you and like, oh, what is Bitcoin? You have to go all in, like, it's going up. There's no point in doing that. Like, they will just write you off of crazy and never look at Bitcoin ever again for the next like 2 years.
Yeah. So, I mean, I think that's just adding a small bit to a portfolio, I think, is a good, essentially anything that just makes the first step, because there's something psychological about, and even if you've got, just $10 worth of something, you then notice when that something is named on TV or in the papers, and you'll read a bit more about it. You think, even though it's, it's completely irrelevant, the value, really, because it's slightly more than zero. And so I think what I'd encourage people to do is to get off zero, first of all. And that's why, if I'm talking to friends and family, then I'm talking about Bitcoin as being a long-term savings account. And the long-term bit, of course, is to manage the short-term volatility, of which we are enjoying some at the moment. And so, so long-term savings account, and eventually it'll turn into a short-term and long-term savings account when the volatility dampens down. And from an institutional point of view, just try and make that first step in terms of just adding a little bit to a portfolio. I think is good. I mean, one of the things that we are hoping to fully launch early next year, is a Bitcoin payroll offering. So I'll touch briefly on that. But the logic is there that, well, first of all, I'd want to get paid some of my salary in Bitcoin. And I'm sure others would as well. And then as the movement grows, there's going to be more and more. And I think one of the things is that we designed it in such a way that it allows very small amounts to be paid. So it could be €20 a month, for example. So it's only enough. So it's not really enough to make a meaningful difference to their wealth, but it's enough for them to get used to the idea. And ideally, they use that €20 worth of Bitcoin to then, buy a coffee, buy a sandwich, buy a bit, whatever it is, right? Just buy little things, just to test it out and see how it works. And that would be a positive experience. And of course, it's good for the circular economy within Bitcoin. So there's things like that which I think are longer term in nature, but should help the payment side rather than just the store value side. Because that would be my view, is that I get that, obviously it's store value properties, long-term store value properties are very helpful when it comes to looking at portfolios of assets or that kind of thing. But you store value into the future so you can later spend it. And therefore it's important that we start spending it. Sort of one thing I've said maybe a handful of times is, if you're not willing to spend Bitcoin, then you haven't got enough of it. Which I think is also trying to lead into the Austrian economics theory, which Saifedean has talked about quite a bit, I think. So I'll give him full credit, but about how you need to build up enough of a cash balance in whatever money it is, but enough of a cash balance before you're then willing to spend it. And that's at that point that it starts turning from a store of value into a medium of exchange.
I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups, because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I love that, because I also 1 year ago I started spending Bitcoin because I started earning in Bitcoin, and then you're like, oh yeah, actually it's really nice if you earn it. Then you also want to spend it because you kind of don't want to have to deal with fiat anymore. And now there's like this cash flow that is coming in Bitcoin and going out in Bitcoin. It never touches any of my fiat accounts. So that's the best thing. I want to know, like the beginning you said in the beginning was really interesting, where once you buy in even a little bit, all of a sudden you see it everywhere. I compare that with cars. I don't know if you've seen that, but if you buy a new car, like let's say a BMW or something like that, all of a sudden you see all the time this new car that you haven't seen before. I even have the same effect if I research something. If someone is like, "Oh, have you seen this new thing?" And I'm like, "Oh no." And all of a sudden you see it everywhere because your mind is kind of aware of it and now it sees the patterns. And so I find it really interesting, that the same, and that's why I think it's very important for us Bitcoiners to talk about Bitcoin, and make sure that people around us know that we are this kind of Bitcoiner educator. I mean, if you want to be completely private and anonymous and you will not talk about Bitcoin at all, like that's fair. But if you want to drive Bitcoin adoption and you want to be an educator, just make people aware that you know about Bitcoin. I get every single week from someone in the family or like a friend of a friend of a friend has a question about Bitcoin, because they know like, oh, there's this Bitcoin guy, and there are not that many Bitcoin guys around still. Like I'm in the wider range of my family, the only guy. And the interesting thing, because someone asked me recently on a podcast, is your family orange pilled? And I say there's like almost like an onion kind of thing going on, where the core of the onion is me, and then the further out you go on the layers of the onion, the less they are into Bitcoin. And so the people that are closest to me are the most into Bitcoin, because I just bugged them for now over 5 years about it. At some point they gave up and bought some. And so yeah, there's a lot of those interesting comparisons. But I think just being an educator and being there for people if they have questions, and making them aware that there is a Bitcoiner in their family and friend circle is really helpful in getting them over the edge of at least owning some, like just buying the first like $200 of Bitcoin, and then all of a sudden they can learn about it, they can move it in self-custody, they can experiment with it, they can try to spend it and all of that. Like, it's really valuable. This was just like some thoughts I had when you were talking.
Yeah, that's good. I mean, so it's been quite interesting seeing how my investment team here at Cartwright has evolved on that particular point. So it was almost 4 years ago that I was in the team meeting and sort of held a book. Said, "Well, we all need to. You highly recommend you all read this book." Initially, it was sort of, understandably, what are you talking about? Without necessarily saying those words, I think. But then over time, as they realized that I was serious about it, then they dug in, and I know at least some of them read the Bitcoin Standard, but obviously there's lots of other resources out there too. And now it's got to the start. It's brilliant, right? So there's still, there's still the odd skeptic in there, and that's fine because that keeps us all on our toes. But it's now when a certain topic comes up, actually it's them mentioning, well, how does Bitcoin fit into this, rather than me. So that's really good, because otherwise it just sounds like I'm nagging or something like that, and I don't want to be doing that. So it's really nice for others to be chipping in. So I guess that's one example. And another example would be in the pensions industry in the UK, where I've been, over the last year, as I mentioned earlier, very vocal. One of those areas is on LinkedIn. And I think that's encouraged, essentially, I suppose I've put my own reputation at risk to give cover for other people to come out and disclose them either publicly or privately through private messages to me, as either a Bitcoiner or tending that way, or or at least just liking that the industry is coming up with different ideas rather than the same old stuff. So that's been, so I have had some heat from certain areas. But what makes it all worthwhile is when I get a message from someone saying, "I'm really glad you're speaking about this." It's sad if they say, this goes back to the careerist point, it's sad if they say, "I can't speak out," or "I'm trying to speak out, but I just keep getting dismissed in my company. So that's sad, but at least it feels good that they're able to sort of release their emotions somewhat when they're talking to me.
It's also interesting how it is so emotional, as you said, with the heckler you had. This is like either you are. I had a professor in university, the very short time I was in university, that had an IT security class. And the first thing he did in every single class, like when he started it with new students, he was shitting on Bitcoin. And he even had presentations at like events, and he was at IT security. Like he was teaching people about IT security. He didn't had like, he was not in finance. He was not in anything else. Like he didn't had a mandate to talk about Bitcoin. But he always talked about like how bad it is for the environment, how much, electricity it consumes, even though like, I would be curious if he still does that, because he did it while it was trendy to do so. Now it's no longer really a thing to say Bitcoin is bad for the environment, because like I think the people have run out of arguments, and the good arguments actually has won. But it was interesting for me because I was always thinking, even when I was sitting in the class, he is promoting Bitcoin in a weird way, because he didn't need to talk about it, but he brought it up. And so it keeps, and then there is like at least like one student in there that says like, why is he talking about Bitcoin right now? And then he maybe sees a Bitcoin video and now he gets orange pilled. Like the haters, make people aware of Bitcoin. And it makes the people that love Bitcoin even more raging on Bitcoin. Like this whole thing of like, if you have no enemies, it's hard for people to actually love you. So you need the kind of the raging haters to have the raging lovers. Like, oh, like I cheer for him because like he gets also hate on the other side. And so Bitcoin is really emotional. I still try to figure out why it is, because it's just money. It's just a protocol. People were not as emotional with the TCP/IP protocol, it seems.
Yeah. It's weird, isn't it? I mean, I get why people love it, right? Because you can see, once you look through the Bitcoin lens, you can see the destruction that is ongoing in our world because of how fiat money operates. And so I think there's probably a part in everyone, which is you want to see a better world. He says, most people, we want to see a better world. And therefore this tool has come along, which enables a better world. And therefore to feel passionate about that, maybe I'm hugely biased, but I've got a lot of sympathy for that. Whereas this tool comes along and you hate it. So where does that come from? What is that really saying? It's like, if you apply the same thing to the invention of the wheel, why would someone hate someone using the wheel? Or, it's a really weird emotional. I mean, it suggests there's something else going on there. I mean, maybe they're worried about it's a scam. So you could argue that, if they've convinced themselves it's a scam, then they are worried in the same way that they're emotional, in the same way that we're emotional, in that they want to see a better world and they don't want to see scams. Completely get that. I don't want to see scams either. That's why I'm focusing on Bitcoin and not, the wider crypto universe, where some of it you could argue is new technology, but obviously a lot of it isn't. So it's really weird how some people, really start to hate things.
I have two theories on that actually. Like that's the one easy one that people feel attacked by it, because it might challenges worldviews they have. But the bigger thing is probably that they spoke out about it in a bad way, and they missed out on a huge gainer, and now they are kind of feeling like Michael Saylor could have also done the same thing. He's spoke out, I think, in 2013 or 14 publicly on Twitter bad about Bitcoin, and I don't know, I don't even remember the tweet he meant, but it was a really bad one. It's like, oh, like Bitcoin is a bubble or a scam, or like it's not worth investing. I don't know what he said, but like something along those lines. And he could have easily said like, oh no, like I stick with that. Like I have an ego, like, all of those things. And I said the same thing. I said for 3 straight years from 2017 to 2020, while I was investing in stocks and Tesla and Apple and like many other tech investments. I said all the time, because I was a Warren Buffett, kid, and was learning a lot from him, that Bitcoin is a scam. And it took some courage to go then to my friends who I told that Bitcoin is a scam, that I'm now investing in that scam. And I think the longer you live, the harder it is to like reverse course. And I don't know, I feel some people just got into the way and cannot really back out there. And then of course, as I said before, there are also people that just feel attacked, and feel kind of, it's a new thing, and they like the world how it is, and they don't like it to be changed. Change is scary, especially for successful people.
Yeah, I mean, I think that's that last one is actually very powerful. Some things work for a long time. It takes a lot to throw it away and use something else, use a different tool instead, when you've been very successful with it.
How was actually the first year now for the pension fund? As I don't know exactly when the year started and ended, but it's not a it's from a price action, not the home run. Is this something that you like having to discuss, that price action short term? Is there probably something you already discussed with them beforehand that you don't know if this is going up and down? Like how are they kind of reacting to what Bitcoin is doing?
It was middle October that they invested, and so it was helpful timing, in that there was then the sudden rush up in, I think it was really triggered. It was Trump getting elected in early November, and that then triggered a run up in the price to the end of the year, and then this year has been up, down, sideways. So we focus. So this is a 10-year investment. So it's not a quick trade and in and out. It's a 10-year investment, and that's the mindset. And every time I speak to them about it, it's the price will be volatile. We issue a quarterly report to this set of trustees, and yes, it has to have a little bit there in terms of what the price was at the start and the end of the quarter and things like that. But actually, the bulk of the report is what's the health of the network, because that's the ultimate long term. So we look at that's the ultimate long term investment case. So we look at things like wallets with more than a negligible amount in them, or non-zero wallets. How many of them are there? We look at the number of nodes. We look at the percentage. It's a bit tricky getting information actually on the percentage of the miners that use renewables or sustainable in electricity. But we try and put something in on that, because that shows that basically it's more sustainable than anything else you're investing in. And there's two or three other metrics that slip my mind, but it's all built around the health of the network in terms of number of transactions, things like that. And I think that's where the focus should be, right? That is, we have here a form of money that's going through a monetization stage, and it's going from a very low, zero adoption 16 years ago to hopefully much, much larger. And that's what we should be tracking. So where will adoption be in 10 years' time? I don't know, but I'm going to be massively surprised if it's not much higher than where it is right now.
One more thing that I was wondering about is how you look at treasury companies. I mean, there's like many different kinds of treasury companies. Those that just have a profitable business and put Bitcoin on the balance sheet. Those do fiat engineering. The how they call pure play. They just do the treasury company, and then in their own league, I think is strategy. How do you look at them, and how do you kind of assess the treasury company play?
So I should first disclose sort of a potential conflict of interest in this conversation. Or two elements to it. So one is we are, our background is advising on and implementing movement of assets and the safe custody of assets. And so we're looking to do that actively with Bitcoin treasury companies where we think they're serious about, this journey. And in the case of one particular Bitcoin treasury company called Connecting Excellence Group, or I'll go by the ticker of XCE, that's intending to IPO imminently, I'll become the non-executive director chairman on that particular company. So you could argue I've got a little bit of a vested interest, but I think it's I think there's a solid case for why. Was a massively positive case actually for why Bitcoin treasury companies should exist. And it goes back to what I was talking about earlier with the spending, savings, investing. People investing in things they don't understand, like just equity markets generally, or bond markets, or property markets, real estate markets. That money, or at least some of it, has got to come out of that monetary premium back into savings, so back into Bitcoin. So how's he going to do that? Because you've got certain trapped capital in various different ways. Equities and bond markets, it's going to be Bitcoin treasury companies that do that in some shape or form. So it's very important, but they're not all built the same. So some are going to be built well, some are not going to be built well, essentially, and not going to last. Now, I agree with you that the first wave of, strategy aside, because strategy, it almost doesn't matter exactly what the business model is of strategy, because it's so big now that it doesn't matter if it just holds Bitcoin or it does something else with its operating business or whatever. It's in its own category. But if we look at the others, there's ones which their main focus is on just buying and holding Bitcoin, and that's fine, right? They're part of the journey as long as they're holding that Bitcoin securely. And not rehypothecated and things like that. So it's applying a lot of the Bitcoiner principles that we're familiar with to how a company can operate. However, we are now getting what I think of as the version 2 of these Bitcoin treasury companies coming through, and I think we'll see quite a number of them over the next few months, and that's where the operating company itself has, and maybe not traditionally, but it involves part of it where it is itself accelerating Bitcoin adoption. So the great example is the one that I'm involved with. So they are a recruitment, executive search. They've been in business for since 2014, and they bought Bitcoin on the way. But private business, go back to your point about private business, you can just sort of do it and no one else has to know about it. So think about the recruitment. So one of the issues in all kinds of different companies, in all kinds of different industries, is that this new tool, this new technology, which is actually going to have even more impact than the internet, is going to affect their company in some way. They shouldn't just ignore it. So how do they think through all the different impacts of Bitcoin on their business? Well, they need someone or some people to actually really focus on this issue. But this is a specialized area. There's not that many people in the world that actually understand Bitcoin, and therefore they're going to be highly sought after. But if these companies are serious about the future, then they need to be thinking about, now, loosely call it a chief Bitcoin officer. It doesn't need to be necessarily. I think that's the ideal in a way, because chief Bitcoin officer implies that you have that person sitting on the board of the company. It shows that whether internally or externally that the company's serious about Bitcoin and Bitcoin adoption. So it makes a lot of sense. However, there's probably smaller steps en route to a chief Bitcoin officer. So it could be that they find someone a bit more junior, internally or externally, that has an interest in Bitcoin, and they say, "What? Just spend half your week just trying to figure this thing out." It could be that they hire someone like us, so a consultant, to sort of come in and give them a bit of a steer. Maybe need a bit of internal resource as well as external resource. There's lots of different models about how companies can take their first step, but I think the key thing is to take the first step. So what Connecting Excellence are doing is created a division of the recruitment business, which is focusing on this area. And so you then have the operating business, which is explicitly looking to accelerate adoption, whilst also on the Treasury side looking to buy Bitcoin. And then it's a circular beneficial situation. So that's what I think the next wave is. These it's not a very catchy title, is it? Version 2, but these version 2 companies, I think we'll see more of these, but they'll all come at it from a different angle. So they might come at it from banking side or just other areas. I'm going to try and list them all. So that's really quite interesting, and I think something to watch out for over the coming months.
So basically a treasury company, but with an actual business also, like the actual link to.
I mean, some of them have businesses anyway, but even if maybe it was small, so it's sort of negligible, but even if they had a business, it was nothing to do with Bitcoin. Whereas if you've got true Bitcoiners coming in, there's a yes. On the one hand, they want to buy Bitcoin through the company, but on the other hand, they want to pivot their company either partially or entirely towards Bitcoin as well. And it's the combination of the two that creates this version 2.
Which makes a lot more sense for me, because I have the question, like, outside of strategy. I leave strategy completely outside because I think it's an entirely different beast to anything else. But I always ask myself, like, how can a treasury company that just buys Bitcoin and holds that and does nothing else be sustainable over the long run, outside of being just really early on to the trade? Maybe in the short run of like 10, 20 years, but at some point, don't they need profits and revenue?
Well, also, so yes, and also, it feels rather premature if we have a bear market now. And you could argue, well, it's only been a 30% drop in price, and we've seen loads of those in bull markets. So, but who knows what next year will hold? Next year could be just another sideways market or a bear market. Potentially, there's always that possibility. In which case, if you've got an operating business that is profitable, they can continue to buy Bitcoin through that. And actually, that's good because they're getting it at a cheaper price.
I just heard the weirdest take, I think like 2 or 3 days on Twitter. The bear market just stopped now, and now we are ready for the bull market. Like the last 2 years, this was the bear market, and now we're ready for the bull market.
Very good.
But it's interesting to see the sentiment. Like, I have never received. I mean, it's in the last 2-3 days actually. It's been better. Like last week was, I think, the lowest sentiment that I've ever seen on my channel. Like from the replies, from the comments, how people were like fearful, like asking me like, "Oh, are you selling?" I'm like, "Oh gosh." But it was very low from the sentiment, and also like all those like weird fear and greed indexes. I mean, I don't pay attention to them a lot because like they're very superficial at the end of the day, but they kind of show a little bit of a picture how people feel now. And then I was like, we had like 90K or maybe like 95K, depending on like what day you're looking at. And we have such a low sentiment as we would have just a couple of years ago at like 16K or 15K. It's kind of unbelievable.
Years ago, wasn't there? Which is when it probably was 16K, which was joking about Bitcoin crashes to 100,000. And it's like, it's happened in real life.
Actually, yeah, true. It happened really quickly. Like 2021 to 2022 was the year where it came from like almost 70K to like 15, 16K, which is a huge crash. Like this was no joke. Like everyone that went through that and just did the DCA and all the way, like respect, because I think it takes a lot of courage and conviction to go through those cycles. But we jokingly like, oh, we will crash down to 100K. Now we're crashing down like to 100K, and people like, oh shit, it's over. Like Bitcoin, now we've reached 100K, and now we can go pack our things, and it's done.
So I'm on Nostra, and I follow the Rect bot. Have you heard of that? Are you on Nostra?
I'm on Nostra, but not very actively. What is the Rectbot?
So, but I mean, they probably have an equivalent on X, right? But it's basically I don't know where it gets its information from, probably from some exchange. And essentially it's saying whenever a leveraged, trader has been knocked out of their position, then it's sort of, they had a position of 2 Bitcoin and they've been knocked out and they've made a loss of however many hundreds of thousands, things like that. So, my feed has just been full of wrecked bots. I mean, it's quite cleverly done. It's in a jokey way, and it says, this person's been knocked out of their position and lost however much money, and then it has some meme along with it. That's I guess it's on a bit of a cycle, but it's with that many. But that's quite amusing. But yeah, it's absolutely full. I mean, to the extent I'm thinking I'm going to have to unfollow it because, spend ages you scrolling just through all the vet bots posts. But it shows that there's a lot of leverage being knocked out of the system, and that is that's a positive.
I think so too. Yeah, like we need those cleaning phases in the markets to actually accumulate nicely. Like if you're leveraged Bitcoin, like it's probably not good for you. Of course, like if in a company and all of that, and if you have the unique possibility to raise debt for like a very, very cheaply and leverage it in a smart way. But on an individual level, I almost always say like, just don't do it. If he still does it, I always recommend not doing it, because the few people that really understand what they're doing and they have a great strategy, they will do it anyways, no matter what I say. And so I just hope that I reach those 2-3 people that consider debt that really shouldn't, and then they don't do it because otherwise they might lose most of the Bitcoin. Like many already showed, like the wrecked bot, it's a real thing. People actually get wrecked in the Bitcoin market, and DCA and HODL, those are memes, popular memes for a reason, because they worked over the last 16 years.
Yeah, exactly. Most people, most of what they're willing to put into Bitcoin, they should just be buying Bitcoin, self-custody, and just keep it really, really simple. And obviously there are these there's trapped capital around where you can't just buy Bitcoin. And that's where things like, potentially, obviously it's, everyone needs to make their own, decisions and do their own research, obviously. But that's where Bitcoin Treasury companies come into the conversation. But yeah, people need to be really clear that buying shares in a Bitcoin Treasury company is not the same as buying Bitcoin. They are two very, very separate things. So would you like to? Should we? Do you mind if we talk a little bit about Tontines?
Of course, this was the last thing on my list. Because you told it to me before, the Tontines, and then I was like, "What the heck is that?"
So I'll try to give you a slightly longer version to hopefully explain it better than I did earlier. So one of the issues that people have when they retire is that they might outlive their savings or their investments, lumping it all together for this purpose. So that's a bit of a problem. And that's why things like annuities have been popular over the years. In in the UK, we have essentially when someone gets to retirement, they have a choice between, they've got a pot of money, their pension savings, and they've got a choice. They can either buy an annuity, which is an insurance policy, which pays out a certain amount every year. And maybe that amount goes up in line with inflation, or maybe it doesn't. And maybe if they die, their spouse gets a pension as well. There's various options around it. But essentially, that's what it does, pays them their pension. And as long as the insurance company's around and they're very highly, they're very highly regulated and so on, then they'll pay that pension. The other option is you invest the money yourself, and a lot of people will probably, maybe they buy equities or they buy some property or something like that, and they'll live off the dividends or the rent. But the problem is that annuities are pretty expensive for what they are, and the other option of investing yourself means that you could outlive your savings. So that neither is ideal, and maybe the ideal doesn't exist in the real world, but there's a better option which has become is going to re-emerge quite soon, which is something called a tontine. And this is something that's 400 years old in practice, maybe longer. And the key principle is that the key risk is of outliving your savings. And therefore, if you can pool resources with lots of other people, which is similar to how an annuity works, and that pot of money, let's say 10,000 people will pool their money that they want to put into this tontine, and then that money is invested in some way, and it pays out income or sells some of the capital gains every year to pay, because people on their pension need something to live off. That pays out every month, so they can live off that. Then the world in which we live is that people will die over time, and therefore each year the same amount is available to be paid out, but fewer and fewer people are still alive to collect that income, and therefore it's spread over a smaller number of people. So per person, the amount that each receives is higher, and so you get these sort of embedded increases in their pension, for want of a better word, the tontine payout over time. It doesn't rely on, whereas an insurer for an annuity has, it's highly regulated, so they have to think very carefully about exactly what risks. They've guaranteed that income to be paid. Let's say that £1,000 a month, they've guaranteed that to be paid, and there are lots of risks associated with it. So they need to look at offsets. How do they offset those risks? How do they hold extra money as a reserve in case they get their assumption wrong? It's very complicated. Whereas a tontine is very simple. You just got pool of assets, certain amounts paid out every year, and it's just spread between fewer and fewer people. So I think it helps to bridge that gap between what I mentioned earlier. Investing for a lot of people is investing in things they don't understand, and I think a tontine helps to bridge that gap to make it easier to understand. Now, imagine a lot of people. So tontine itself is something new for a lot of people to get used to. We've talked about Bitcoin, of course, which is something new for a lot of people to get used to. So the pure version of the tontine, I think, is where you combine the two. However, on day one, that's probably quite a lot it's probably too much for most people to get their head around two new concepts. So I imagine most people will start a tontine and just have it in the fiat money market fund, and that's okay. And then maybe they later switch to something else or to Bitcoin. But the beauty of using Bitcoin and tontine together is that you then have a hard money. You pay out initially, I think it'd be fiat, but I get to the point where they're paying out sats every month. And maybe it gets to the point, it's possible to do this with the Lightning Network. Maybe it's streaming sats every minute of every day. I mean, that'd be pretty cool. And so what you do is you have Bitcoin in the tontine and pay out some sats every month. And, so there's no real investment risk in the same way. You're just hedging that, trying to protect against living too long.
It's interesting because first when you talked about it, I was almost like life insurance, but like life insurances are more like insurance against dying too soon. And this is kind of like protecting against living too long as like a kind of pooled investment. I've never heard about that. I have to dive deeper, but it's an interesting concept. Even though I literally heard it about today, so I have to dive deeper, but it's interesting. And so this is also like possible then in the Bitcoin world, obviously, and with services. It's probably also something that a Bitcoin bank could offer. Bitcoin bank, I call Treasury companies like almost like Bitcoin banks. They can do something like that. Interesting. Never heard about it. Thank you so much for sharing, because like I wasn't aware of that at all. I was always like, okay, life insurance there is, like there's other investments vehicles, but a tontine I never heard of that.
Yeah, a friend of mine actually had published, it might have been published today, possibly yesterday, had an article published in Bitcoin magazine about is a tontine, I've now forgot the title, is a tontine, hang on, I think I've got it on my phone. Let me see if I can, it'd be more impressive if I could read out the title. But he wrote an article for Bitcoin magazine, which I think, trouble is I've got so many messaging apps, it's hard to keep track of which one's which.
I found one, it's called The Return of the Tontine, a natural retirement option. I don't know if this is the right one.
Yeah, that sounds right.
It was published yesterday.
That sounds by the Bitcoin Actuary.
Yes, the Bitcoin Actuary. Wait, I can pull it up right here. Screen, beam, bomb. Yeah. So from the Bitcoin Actuary, the return of the tontine, a natural retirement option for Bitcoiners. Interesting.
Brilliant. Yeah. So that's it. And I think, so it's quite a lot of talk. So if you ask most Bitcoiners, what are you going to do for your retirement savings, or, how are you saving for time? They say, well, I'm just going to buy Bitcoin. And I think up to a point, that's fine. But the problem is there are certain risks that you can't just protect against by having Bitcoin. Or, if you want to have, if you're saving Bitcoin, but actually you're saving too much, I know that might be sacrilegious to some, but if you're saving too much Bitcoin, as in you'll never get a chance to spend it all or pass it all on to your kids, or maybe pass too much on to your kids and you want to enjoy your own life as well, then it's really difficult it's impossible actually to know how long you'll live. And things like this is the beauty of this is it's bringing together Bitcoin, which is only 16 years old, with something that's 400 years old, and pulling them together to do something that's basically better than anything else in the market by like a 10x. And I think those are the solutions that really come into their own, is where they are, significant. So Bitcoin is 10x better than gold, right? That's why Bitcoin is getting traction more and more. A Bitcoin tontine is 10x better than an annuity, or, looking after investing the money yourself. And so you'll get these. And what will be really interesting to see over the next years or decades is what else have we got around that we're just used to doing in a certain way for whatever reason, for history. Whereas actually we take Bitcoin and maybe the key aspects of the problem we're trying to solve, and it comes up with a 10x better solution. I mean, that's why I'm really excited, because I think there'll be loads, and I don't expect to think of most of them. I'll just see other people think of them. But that's why I'm really excited, because I think there's probably so many areas where we can improve what we do just by embedding Bitcoin in some way within it.
I love that. And we've got a lot of new things to think about today with the tontines and all the things that you shared with us today. So thank you so much for that. I have one question to ask each and every one of my returning guests, and you're now the second time on the podcast. And the question is, what have you learned outside of Bitcoin since your last appearance?
Oh, okay. Okay, all right. So I've got so one book that I've read recently is called Modern Chains, and it's by a guy called Neil Flesher. And I just found it very interesting. So it was talking about usury, and it just seemed to come up with a much better definition of that. Now, Bitcoin doesn't have usury because, of course, there's no interest, there's no yield. Well, unless you take risk that you may not fully understand. And so Bitcoin in its purest form, a bit like gold coins, doesn't have usury in the money itself. And so, but fiat, of course, does, because it can be created at will, as we know, at extra amounts by central banks. And so I thought that was a really interesting, it's a topic I've heard of before, but I don't feel I've really understood it probably before. And I think that book helped me to understand it more. And I've talked before about related concepts like the Cantillon effect. So it leans on some of that, but so there we go. That's if you haven't read that book, that's probably when there's probably some videos around of him talking about it.
Absolutely. Love it. And we have an end routine, as you know, in the podcast, where the previous guest is asking a question for the next guest without knowing who the next guest is. And it's weird enough fitting a little bit with the Tontines topic. And the question is, what do you personally do to embrace longevity in your life? So basically, how are you trying to live longer?
So I suppose it's, diet and exercise is something that everyone's, we're told from a young age that we think about, but we're not really taught about what that actually means. It's just a balanced diet or something like that. Breakfast is the most important meal of the day. Stuff like that. So essentially marketing messages. So I've been keto now for almost 5 years. There's a little bit of on and off within there. When I say on and off, I mean like for the odd meal here or there. And so I think that's probably the area that I've most focused on from a longevity, from a health point of view. And I feel much better now than I used to.
So keto meaning you do long fasts and no carbs and sugar, or?
It's basically, so it's low carb, but I've sort of got into more of the, I'm probably not under ketosis, which is sort of the official definition. So it's a shorthand for plenty of red meat, eggs, dairy, raw milk is fantastic. Highly recommend that. That's so much tastier and I think better. But things like honey and maple syrup, so natural sugars, I've been a lot more sympathetic to over the past few months. It's amazing how I mean, I'm sure it'll evolve further as I read other things and drop some things and try some other things out. I've always been quite, I say always, certainly in the last few years, been quite open-minded in terms of, are there things in the diet that maybe once were there in the human diet, for whatever reason now they're no longer there. And that could be to do with the degradation of the soil, and things like that. And so, how can that be corrected as best as possible in the world that we now live?
I love that. It's such an important, and I see now more and more Bitcoiners actually getting in all of those things, because they realize, okay, I have Bitcoin, I've figured out a little bit more the finance side of it. Now, the most important thing is actually my health, my time. How good is the time I spend on Earth, and then how long of a time I still have left. And with living healthier, you can make not only a longer life, but more importantly, for me at least, more importantly, a better life. Like the time on Earth is better spent with more energy, and less sicknesses, less illnesses, better rest and all of that. But yeah, I love that. Really cool. Thank you so much for sharing that. And before I let you go, where can people find you and ask you questions and reach out to you?
So two best places are probably, so LinkedIn, You can find me on LinkedIn, and also just come through the Cartwright website. There's an inquiries, that email will find me. Well, it's Nostra as well, but I'm not reading out the NPub. That'd be silly.
It's funny but silly.
Indeed.
Thank you so much, Sam, for being on, and also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.